Thanks, Margaret. Welcome to Q4FY21 earnings call of Alkem Laboratories. From the management side, we have Mr. Sandeep Singh, Managing Director, Mr. Rajesh Dubey, Chief Financial Officer, Mr. Amit Ghare, President, International Business, Mr. Yogesh Kaushal, President, Chronic Division, and Mr. Gagan Borana from Investor Relations. Over to you, Gagan, for the opening remarks.
Thank you, Tushar. Good evening, everybody, and thank you for taking out time and joining us for Q4 and full year FY21 earnings call. Earlier during the day, we have released our financial results, and the same is also posted on our website. To discuss the business performance and outlook going forward, we have on this call the senior management team of Alkem. Before I proceed with this call, I would like to remind everybody that the call is being recorded and the transcript will be made available on our website as well. I would also like to add that today's discussion may include forward-looking statements, and the same must be viewed in conjunction with the risks that our business faces. At the end of this call, if any of your queries remain unanswered, please feel free to get in touch with me. With this, I would like to hand over the call to Mr. Sandeep Singh to present the key highlights of the quarter and the year gone by and the strategy going forward. Over to you, sir.
Thank you, Rajan. Good evening, everyone. Am I audible?
Yes, you're audible.
Okay, wonderful. So good evening, everyone. Once again, welcome to our quarter 4 and full year FY21 results conference call. I will briefly touch upon the key performance highlights of the quarter and the year gone by, and will then leave the floor open for questions and answers. So FY21 was an unprecedented year for everyone, marked by disruptions and restrictions because of COVID-19 pandemic. For a pharmaceutical company like us and the industry likewise, FY21 was a year of immense learnings on managing various headwinds like manpower shortages, changes in demands of various drugs, and limitations in carrying out marketing exercises. Among these challenges, company performed well in FY21 with a revenue growth of 6% year-on-year, EBITDA margin improvement of more than 400 basis points, and net profit growth of more than 40% year-on-year. We also ended the year with a healthy balance sheet and a net cash position of more than 500 crores. Talking about the India business, we registered a growth of 17.1% in the quarter and 4.5% in the full year. In the first half of the year, while the business faced significant pressure owing to lockdowns, lesser footfalls at the hospital OPDs, and clinics and postponement of lockdowns and surgeries, there was a healthy recovery in second half of the year with relaxation in lockdown guidelines. During the year, there was a severe slowdown in acute therapies, particularly in anti-infective segment, due to slowdown in new prescription generations and heightened focus on personal hygiene and sanitation. Usage of masks and sanitizers also helped to bring down the infection rates. This had a significant bearing on the company's domestic business. We derived more than 80% of revenue from acute therapies in domestic, and anti-infectives contributes close to 40%. However, robust growth in segments like vitamins, minerals, nutrients, and trade generics helped us offset the pressure of the acute business to some extent. Most of our mega brands continued to outperform in their respective markets, thereby we maintained our leading position. Last month, we commercialized our first product from a biosimilar subsidiary in Inde, and we are looking forward to more launches over the next few years. Moving on to our international business, which now contributes about 1/3 of our overall revenue. During the year, our international business grew by 10.6% year-on-year and crossed a revenue of 3,000 crores. This was largely driven by our US business, which grew by 11.4% in the fiscal year gone by. During the year, we filed 9 ANDAs with the US FDA and received 25 approvals, including 6 tentative approvals. This bodes well for a future growth in US market, which has largely been driven by new product launches. Apart from US, among other international markets, Chile, Kazakhstan, and UK registered healthy growth during the year. We continue to judiciously invest in our R&D, which is an important pillar of our growth. During the year, we invested about 532 crores in R&D, which is about 13% higher than last year. We now have 152 products filed with US FDA, of which we have received 110 approvals, including 60 tentative approvals. In terms of regulatory status of a manufacturing facility, all our 6 manufacturing facilities applying to the US market have an EIR as on date. Only my manufacturing facility in Indore is awaiting pre-approval inspection by the US FDA. We continue to invest in our people, in technologies, so that we ensure facilities comply to global regulatory CGMP standards. With this, I would like to open the floor for Q&A. Thank you, everyone.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Yeah, hi, good evening. Just wanted to understand the drop in gross margins during the quarter. Can you just explain what led to that, and also the fall in US revenues on a quarter-on-quarter basis?
So, Mr. Dubey, you can take the first question, and then Mr. Amit Khare will answer on US.
Yeah. In fact, in our this quarter's gross margin, there is impact of one, I should not say exceptional, but extraordinary item, that is inventory provision to the extent of 80 crores for one of our product in USA, mainly one of our product in USA. So that quantum is around 80 crores. And that's the reason why gross margin, it looks suppressed for the quarter, as well as having some impact for it on yearly basis also.
And sir, any particular reason why this charge has come? I mean, you said it's not one-off. I mean, how should we think about it? If you can give some more color on the reasons for these charges.
Sure, sir. Actually, as per our policy, any inventory having shelf life less than 6 months needs to be provided. That is as per past history. But wherever we see we are not in position to realize complete amount of that inventory, or is having NRV pressure, in that case it is prudent to have correct inventory on your balance sheet, and you have to go ahead and provide for whatever amount you feel not realizable. So this product having shelf life between 6 months to 12 months, we strongly believe will not be in position to realize completely, and that's the reason why we have gone ahead and provided for it. If any realization happens, then which at this point of time we see not very easy, but if something happens, then it will go to our bottom line.
Okay. Okay. And sir, the US revenues dip on a quarter-on-quarter basis.
Over to you, Sandeep.
Amit. Yeah, Amit. Would you want to comment on it?
Yeah, for US business? No, I'm here. Yeah. Right. Yeah. So, hi, Sayan. So, yes, we grew about 10% year-on-year on Q4 21 over Q4 20. And, a couple of reasons for that. First and foremost, and the strongest reason perhaps has been, decline in our overall acute portfolio for the US market because of COVID. So, essentially, all our winter season products, we generally have, we always have strong Q3 and Q4. This year, we did not witness it. On the other hand, we actually had degrowth in that portfolio. So that has been one of the primary reasons. Second reason has been maybe some loss of market share on some of the products. On a year-on-year basis, purely I'm comparing. And the third reason has been perhaps less number of products or tail-ending launching of new products in the quarter compared to last year. Also remember last year when COVID broke out, particularly in the month of March 2020, there has been a little bit of panic buying and we have seen some one-time sales which came in Q4, which obviously got adjusted during the entire fiscal year. But when we purely compare quarter 4 over quarter 4, there is an impact because of that as well. So these are 3 or 4 main reasons that we've witnessed a year-on-year decline.
Okay, thank you, and I'll join back.
Thank you. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Yeah, thank you for taking my question. Amit, just to follow up on the US business, given we had 25 approvals, if I heard correctly, during the year, I'm not able to understand the quarter-on-quarter decline in the revenue. Was there any product where we significantly lost market share or pricing erosion? And is there any product that we haven't launched from the 25 approvals which can come through in the next year?
Sandeep, do you want to answer that or do you want me to take that up?
No, Amit, go ahead, Amit. Please go ahead. Yeah.
Right. We haven't, the primary reason, as I said, I gave, 4 reasons. And the first one, obviously, is a large part of the reason. A collective portfolio that we have for our winter season, leading with benzonatate and, of course, with many other anti-infectives and some pain management.
Amit, I'm looking at it quarter-on-quarter.
Yes, quarter-on-quarter. So, winter season products, winter season generally starts buying from retailers. Generally starts around October, November, and lasts until February. So the 2 months of January and February, which is part of the winter season, this year our sales, usually decline compared to, last year. And that is one of the primary reasons, including the other couple of reasons I gave. And specifically on your question with respect to new launches, as I mentioned to you, we haven't launched all the 25 that we received approvals on. In fact, 6 were tentative, so obviously those are not launched. Of the remaining 19 and of some of the other products that we had, received approval in the previous fiscal year, all of them were available for launch, and only some of them were launched. In fact, about less than 50% of those were launched in the entire fiscal year. So there has been a little bit of back-ending in terms of the new launches as well.
Just to get it right, less than 50% of the 19 approvals that we got has been launched and the rest will be launched in the next fiscal. Is that correct?
That's correct. So we actually have launched about 12 products, if I remember, during the entire fiscal year. And I don't exactly remember if all 12 were, part of that 19, or there was something which was in the previous fiscal year which also got launched.
Okay. And for next year, you usually mention about 8 to 10 launches, per year. So then should I assume that the launch momentum will be higher because of these products spilling over from FY21?
Definitely, yes. We are looking for, certainly a double-digit number of launches during this fiscal year.
Understood. On the India business, could you throw some color on, how the India business is doing, particularly in April, May? Have we seen some impact on the recovery that was happening, or is this second wave very different from what happened last time when there was a lockdown and increase in COVID basically?
Sandeep, should I answer?
Yeah, what I'll do, I'll just start off with Vivesh and then you can talk more. Otherwise, I'll be answering no questions and you'll wonder why I was here. But okay. Anyway, so your question is more going to do with quarter 4 or what's happening currently right now?
Currently, in the recovery that we saw in fourth quarter, or like you mentioned, the second half, has that fizzled out in April and May because of the second wave? And again, just getting a sense of how
understood. Yeah. No, so Neha, yeah. So that's what I was asking. Your question is more for what's happening currently, not so much of quarter 4 which we are discussing. So I think as you are aware, the IMS numbers which we have seen a huge growth in the pharmaceutical industry as such. In the second wave, what is very different is that in the first wave, antibiotic sales has kind of collapsed, if I can say. This time, it seems that doctors are using a much more aggressive regimen to treat the drug because of, let's say some pneumonia, acute pneumonia. And Yogesh can talk about it. I think there is a strong recovery for us and for the industry in the last couple of months when it comes to pharmaceutical sales. Yogesh, you can please add some color to it.
Yeah, I think Sandeep, you answered absolutely perfect, because last year, one is that people were confined to home. This time they are moving. So patients relatively are there, and therefore the infection rates are high. And in last year COVID, the secondary infection of pneumonia wasn't there, which is extremely high this year. So there's a different wave compared to the previous one. So the antibiotics have shown a very good revival. And of course, the allied therapies, which are parenterals of acid management and vitamin C's and multivitamins, zinc preparation, they also have shown a very good increase. For this reason, we foresee quarter one, should go much better compared to last year.
Understood. Thank you so much.
Yeah, thank you.
Thank you. The next question is from the line of Nitya Balasubramanian from Bernstein Research. Please go ahead.
Hi. So my question is actually on the sales and marketing expenses in India. Of course, Q1 and Q2 were extraordinary quarters where you realized a lot of savings. But if you can talk to us about Q4, was Q4 largely a normal quarter in terms of how much you would normally spend on the ground? And what is your outlook for the Q1 now and the rest of the year in terms of the sales and marketing spends in India?
Yogesh, you can go ahead, Yogesh, and you can give some color to it, please. Yogesh?
Yeah, Sandeep. Yeah. So see, last quarter 4, I would say that our marketing spend was normal, a little higher, because we were preparing for our first quarter. So last quarter 4, intentionally we took a little high spend to prepare for a quarter one. April, I believe, has gone almost normal. So our investment, even in the month, also was quite okay. May we are seeing slight sluggishness in marketing activities, but the way the cases are receding, I think from mid-June or July onward, we should be back to the normal in terms of our marketing spend.
Understood. In some of the previous calls, we had spoken about some savings that you might realize which could prove to be sticky. So in terms of that, are you seeing anything that you're able to realize and keep control over now that we are in FY22?
Yeah, so other than our in-clinic activities, which constitute close to around 60 to 65% of our spend, the rest, which is related to conferences or CMEs, they all will become virtual. So those savings we foresee. And, the way the trend is, unlikely that doctors or people will start traveling to the international or domestic destinations. So they will go virtual, and that will certainly get some savings to us.
Understood. One quick one on trade generics. If you can throw color on, did you see again now the market saw some revival in Q4? What impact did it have on your trade generics business and the growth there? And again, now that we are in wave 2, any changes you're seeing to the mix of branded generics and trade generics contribution?
No, I think the mix has not changed dramatically in the last couple of months for us. The mix is the same. In fact, the mix would have slightly gone down for trade generics because of the strong revival in acute prescription business. Quarter 4, I think, the quarter which we have been discussing, trade generics was close to around 20% of our revenue of domestic.
Thank you so much.
Thank you.
Thank you. The next question is from the line of Rashmi Sancheti from InCred Capital. Please go ahead.
Yeah, thanks for the opportunity. Little more on India business. how are we seeing the hospital portfolio? I mean, I understand that, the co-prescription product in the acute segment and the seasonal sales is something which would support the growth in near term. But, the elective surgeries and everything is still getting postponing in the hospital due to the COVID surge. So how do we see our antibiotic or anti-infective sales, especially catering to the hospital therapies?
So Yogesh, do you want to take that, Yogesh?
Yeah, Sandeep, yeah. So see, hospital elective surgeries will still take time. I don't see, at least for next 1 quarter more, unless until there are emergencies, they will go for the surgeries. But incidentally, the OPD patients are very high. So whatever gap we had because of hospital business is almost getting offset because of very high OPD patients. So our anti-infectives in orals and antacids in parenteral, there we are almost on, so we are not suffering. Some of our antibiotic injections may have some challenge, but that will be offset by the other therapies which are helping us or supporting us.
Okay. And can you give the contribution, like, how much, domestic sales comes from this part of the segment? I mean, if you can give in a normalized business level.
Difficult to give this.
We'll come back on that, but then we'll send the information to the hospital in the business for sure.
Sure.
Okay. So how do we see the India business going ahead for FY22, in terms of growth?
Sorry, I missed your question. Can you repeat, please? I couldn't hear you well.
I'm saying that any guidance on India business, for FY22?
So I think the guidance is kind of virtually on the same guidance, where we say kind of mid-teens. So I think we will stick to that. Maybe if things, sales are as high as what's been in April and May, then maybe we'll do at a higher band of that. But our guidance has not changed, ma'am. Thank you.
Okay. Thank you. That's it from my side. All the best.
Thank you.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Good evening. My question is on the strong cash flow that we have seen in this year. So how do we plan to use the cash as well as how should we look next year?
Yeah, Prakash, your question is basically, to be more specific, you mean to say on a dividend policy, you mean, or like CAPEX, like what exactly you want to know?
Yeah, CAPEX, dividend policy, and
everything.
Some M&A is in the works or anything that you're thinking over the next 12-24 months.
Okay, so Prakash, nothing has changed. This question is asked to us, and we always keep saying the same thing. So nothing has changed. We will have some cash surplus end of the year, obviously, but we'll stick to our dividend policy. There's nothing huge changes in CAPEX plans, nor as a company we have any large M&A plans. That's not in our DNA. So be steady as it goes. We, in 3-4 years, when we really think we have a problem of plenty of cash, we will obviously discuss few things before that and kind of steer the ship, but nothing changes right now, Prakash.
The question why I asked is we have seen some inventory moving up quite a bit. And this, in the past you have said, given COVID, you are keeping higher inventory and all, but I hope this will reverse in the next 6 months. So you will...
Yeah, I think it should.
Yeah, so that and plus India outlook being mid-teens, so you would have a much stronger cash flow is what I understand in 22 versus last year also.
Right. Yes.
Okay.
Yes, Prakash. But yes.
Okay, understood. And second,
cash is good. Cash is a good thing to have.
Yes, it is. So I was just asking, if there is any plans for use of cash. Secondly, on US pipeline. So when we think of pipeline, we have seen gradual increase in your R&D as well. So where is our thought process in terms of, what are the kind of products we should see in the next 12, 24 months? Are there ET products, CGT products, FTFs? Any color would help.
Sure. Amit, do you want to take that, Amit?
Yes, I can answer it. I'm here. Yes, Prakash, so, it's actually going to be much of the same. Our focus continues to be obviously oral solids. So you're going to see more of that. And we, of course, at the same time do work on, oral liquids and powders and some semi-solids as well. So there is, work happening on all the fronts. But there's really nothing that I can guide for future in terms of, what we are working on.
And
but potentially there could be some CGT or Analysts launch or something like that, Prakash. We're not very sure, so to say that it will happen might be a little bit of a adventurous statement, Prakash. But we have an eye, we could do it. We are not sure right now, Prakash.
Okay. And lastly, on the margin outlook, since we have a positive outlook on the India business and the mix would improve, I understand that. So our gross margins and EBITDA margins should improve even on the high base of last year, or with cost increasing, it should stabilize at that level. What is the outlook, please?
I think that's a great question, Prakash. So you're right. Please keep in mind that gross margin is, will be impacted, one, because of acute sales going up. So the mix would change compared to last year as a ratio. And also your API prices have moved up in the last few months. We don't know how much that would sustain and what would happen. So I would say that we could factor in 100 basis point of impact on gross margins. By and large, we obviously can't predict, we don't know very well, but that's what's going to happen, we think. Mr. Dubey, if you have some color on it, please, Mr. Dubey, please feel free to add.
Yeah, no, sir, you have covered it very well. So same thing, even though our business mix, it may be favorable, Prakash, but API prices, and not only API, even packaging material also. So we see a lot of material prices, it has gone multifold. Substantially it has increased, I mean to say, and obviously the impact of that is going to be there on our gross margin of next year. And as managing director, he rightly said, we foresee 100 and 150 basis point kind of impact there. But we stick to our guidance on EBITDA margin. We'll ensure that, and we are very optimistic this is not going to last for very longer time. But we manage our EBITDA margin, and we are going to stick to our guidance.
What is the guidance, sir, if you can repeat?
Guidance of EBITDA margin, actually, if we are taking 20 as a base, then our guidance is to improve by 200 basis point. So 17.7%, if you recollect, it was our EBITDA margin in 20. So we'll be somewhere close to 19.5 or somewhere very close to 20%.
Okay, fair enough. Thank you and all the best.
Thank you. The next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Hi, thanks for taking my question. So just wanted clarity on that 80 crore chargeback we have taken in US. So for this quarter, US business, is it EBITDA positive or the EBITDA has gone due to this provision?
Mr. Dubey, you can take that.
Yeah, thank you. Ranveer, after taking this charge of 80 crores for the quarter, I'm talking for the quarter, at EBITDA level also we see big pressure, and it is not in positive. But of course, on yearly basis, it's quite comfortable.
So normally, the US business generates better than average EBITDA margin of company, or this is lower or higher than the company's average?
Domestic business is having better EBITDA margin, but even US business is also having reasonable EBITDA margin.
So it answers below the company's EBITDA margin very clearly.
Yeah.
Yeah.
Okay. And secondly, on the India business, you commented marketing expenses or other expenses rather in this quarter is higher because we are preparing for next quarter. So that I wanted to understand. That means what you are saying that we have budgeted in this quarter for sales or promotion that would be used in next quarter. How that explains?
If you can just repeat your question. I heard you talking about quarter 4 high, but what was your next statement after quarter 4?
No, you commented that other expenses is higher because you are preparing for next quarter.
Yeah.
So I wanted to understand in better perspective how what type of preparation normally we take for next quarter. Like we budget higher promotional expenses in this quarter, or how it explains that.
So I'll ask Mr. Rajesh Dubey to answer, but before that, see, if you remember our quarter 1 and quarter 2 marketing initiatives were lower and we were not spending because of lockdown. So in quarter 3 we step up, and in quarter 4 whatever our marketing activities, we step up to the highest in the last quarter, so that we prepare for the next quarter, which is quarter 1. That was my answer. Anything specific you want to ask me here?
No, fine. Okay, I think what you want to explain, or what I understand is normally the kind of incentive or marketing expenses, whatever is accumulated for Q1, Q2, normally you pay in Q4. That's what you want to say, so that the next 2-3 quarters, again, that will be accumulated to be paid on, on Q4. That's what you are saying?
No, this was purely marketing activity specific answer, not about incentive.
Okay. Anyway, and the next one on biosimilar, the product we launched. So how is the things going there? What kind of for that particular product? What kind of revenue we can build for FY22?
So to be honest, product-wise, we never talk about revenues as a policy, but the product which we have launched is a peptide, and we already marketed this product from before. This was manufactured by somebody else. We are marketing it. So this is a running product for us, but now this has come in-house. So this is not something earth-shattering for us, but this is the beginning. So the first product is a peptide, but going forward we'll have monoclonal antibodies and things like that. So in terms of revenue, it might not move needle this year, this product. Yeah, thank you.
Okay. Now, earlier you indicated that business could go up to 2,000 crore in 4-5 years. And that perspective, I wanted to understand, this is the first one. So this is just a small product, and we have a bigger product later in course of time.
Yeah, of course. The pipeline will always be more than one product. Yeah. So we do have, but it's going to take a lot of time for other products to come in and for us to really move the needle. Substantially, it will take time. So as I said, 5 years, this is the first month of that 5 years. And as you know, in biotech and in science, most of the things will be back-ended. So this is going to be a very slow process. Most of all here have seen the biosimilar journey of the large pharma companies. It's going to take a lot of time, and we'll have to be patient and watch it. It can't change quarter to quarter. Thank you.
Okay. No, thanks a lot. That's it from my side.
Thank you. Yes, thank you.
Yeah.
Thank you. The next question is from the line of Sameer Deshpande from Fairdeal Investments. Please go ahead.
Hello. Regarding this guidance, you mentioned that the revenues or sales are likely to grow in mid-teens for the year, and the operating margin you mentioned that around 20%. So this year we had an operating margin of around 22%. So it will be lower by 2%?
Yes, 100%, because that's what Mr. Dubey said, that we have to compare with not last year, but last year, because last year was an extraordinary year. Once in 100 years, these things happen. There was a 3 months of kind of complete lockdown in India. So obviously, there were a lot of exceptional savings, which cannot happen every year. That's the reason.
And this inventory write-off, which we took off about 80 crores in this quarter. So normally these type of things are also aberration, or they keep on happening?
So this is a large amount. This has happened maybe, very rarely for the first time. It's a large amount. So it's not, inventory write-offs happen, but not such a big quantum. It's an exception that way, business-wise. Yeah.
And this COVID...
on that, you could please add, Mr. Dubey.
No, sir. I think you have replied completely.
All right. So thank you. Yes.
Regarding our acute therapy, which is our main product line contributing to majorly to our profits, which currently is down due to COVID, and maybe as you mentioned, the Q1 and Q2 also may witness some impacts on the surgeries, etc. But other anti-infectives and antibiotics, etc., you hope we will be able to grow overall in this Q1, Q2 also?
Surely, I think we will. Mr. Yogesh Kaushal, do you want to kind of answer that?
Yes, Sandeep. Just to add to what Sandeep you said, that antibiotics are almost back to normal. So may not be in the same indication, but because of very heavy pneumonia existing and then the secondary infection, if you see first 2 months trend, April and May, there's a very good traction in antibiotic, and we expect this to continue, at least for 2 to 3 months more. Yeah.
So we hope to the setback which we are getting in our acute therapies because of lack of surgeries and postponement, will we be able to compensate for this with this the sales of anti-infectives and antibiotics?
That is exactly what I said, that because of OPD increasing, so whatever loss traction we might get on a lower side from hospital will certainly get offset from the OPD increase, and that is what we are witnessing in last 2 months.
Okay. Thank you, Vinay. And the financial management we have done really very well. So it is nice to hear that we are net cash available with our 500 crores odd. So these long-term loans which we are currently having, about 1,600 odd crores. So do we plan to repay them significantly because of the good cash accruals?
Yeah, Yes, I'm taking this question. Actually, we don't have any long-term debt. We do have debt in form of packing credits, mostly, or ODs, and these are short-term loans. But we do have some term loan in our US subsidiary, but that amount is only 7.5 million or 10 million kind of, so not beyond 75 crores. So yes, of course, that will be repaid wherever it is due for repayment, and we do have cash in our hand. And when we talk cash, we always talk net of debt. So what we have a figure we are talking 500 plus, that is net of all these debts, including short term and long term. I think I am able to reply to your question.
Because currently this.
I'm sorry to interrupt you, Mr. Deshpande. May I request you to rejoin the queue for follow-up questions, sir? There are several others waiting for their turn as well.
Okay. Thank you.
Thank you. The next question is from the line of Ritesh Rathod from Nippon India Mutual Fund. Please go ahead.
Yeah. Hi, everyone. Can you help me understand what's this price erosion in US business, particularly in last quarter, and what's the outlook on the pricing side on a like-to-like basis?
Yeah, Mr. Amit Ghare, you can take that, please.
Sure. Purely in Q4 compared to last year, the price erosion has been in higher single digits. Price deflation.
And how will be the outlook for next year? What are the conversations you are having with your customers? Since now COVID is not like the supply chain sustainability and the fear of supply chain is out, as pricing has become a main point of discussion with your customers, would that be very severe in next year?
So, look, pricing is always important, and no customer is going to pay a premium generally. But the deflation, obviously, in Q4 and even Q3, so during the year overall, if I say, was certainly higher than what we have witnessed in the past. Some of it maybe has to do with our product mix also, wherever we had our winter season products, because of degrowth in the market itself, maybe it also witnessed higher price deflation. Overall, going forward, the deflation will always be there, but we hope that it is not going to be similar to FY21.
Okay. So overall FY21, it was in high single digits.
That's correct.
And maybe my second question, you gave some answer to the previous one of the question which was asked. So last 2 years has been strong cash generation and your capex has not been that high. Approximately last 2 years number is 500 crores and your operating cash flow is 1800 crores. On the next 3 to 5 years, which are the areas of geographies which you will invest, and would your cash generation, what's the plan? Because your investment requirement may not be that very high. So if you can help us understand on that.
Amit, do you want to take the question of international business where we focus, and on cash, Mr. Dubey and Mashik will take it. Amit?
Sure. I thought the question was mainly on cash and capex, so maybe I'll just hand it over to you.
Maybe let me rephrase.
I think, if I didn't understand, I think he was asking what's your plan for other countries and things like that. But if I didn't understand correctly, then yeah.
Okay.
Purely on cash you're asking?
So look, for other countries, we are very focused. We operate only in few countries, and like we have mentioned in the past, and we've seen overall as well, our growth mainly comes from 3 or 4 markets. This year, in our emerging markets, particularly the markets where we depend upon prescription generation, have witnessed a degrowth pretty much for the same reasons that our India business has grown significantly less than what we've grown in the past. And we certainly don't have that kind of muscle that we have in India in some of these other retailing markets. But going forward, we will continue focusing on our key geographies. Australia, Chile, Europe are 3 main geographies that we are focusing on, and a few more markets like Kazakhstan and Philippines, East Africa on the detailing side and the emerging market side. So those are the ones that we continue focusing.
Yeah. My point was more on which area, which geography, which you will invest in next 3 to 5 years, irrespective of India or outside India. As an Alkem, given the way we ramped up US in last 4 years, we have doubled the US business. What would play out in next 3 to 5 years? If you can just help us understand that.
Yeah. So I think
nothing significant. Sorry.
Yeah, no, Amit, sorry. The reason I was coming in because you asked India and US and also overall. So I think as we all know, for India, our overall investments are kind of already done in terms of expansion of field force for chronic, which was, a little ahead of the curve and things like that. So India will not pick up that much of kind of capital anyways. And please keep in mind, when we say that we want to discuss other countries, I think bear in mind that US itself, we have not kind of reached our potential. So just because, it's good fun to go into other countries, I don't think so we should do that. I think we are still less than half of what we can do in US. So clearly we'll continue to invest in US and no other country that much. India and US are the primary growth drivers for us in the next 5 years. Where we could perhaps look at few things is our product pipeline and things like that, like doing some biosimilars for various markets, but that will also be a 4 or 5 year game plan. Amit, sorry, you go ahead, Amit. You were saying something, please add to it. Yeah.
Sandeep, you absolutely bang on answered, and India and US are our growth levers, and even during the full fiscal year, as you noticed, US business has grown higher than our other markets, and that is pretty much the story for several previous fiscal years. And I guess the main growth lever will come from US as far as international business is concerned.
Okay. Thank you. That's so much.
Thank you. The next question is from the line of Kunal Randeria from Edelweiss. Please go ahead.
Yeah, good evening, everyone. So my first question is on your vitamins portfolio. So the growth has been very impressive this year. I'm sure a large part of this growth could be because of the COVID crisis in India. So just wondering, about the stickiness of this portfolio. Once the COVID recedes, then do you expect pressure on this business, or there's an element of stickiness here?
Yogesh, you can take that, please.
So see, post-COVID, the product mix we have is a very versatile in nature. So even as, slight impact if you see in the later half of the year on antibacterials, we have a very strong portfolio on acute front in vitamin D3, multivitamins, zinc preparation and antacids. This is also now supported by a reasonably good portfolio on a chronic front, so which contributes close to around 16% of the business, and on a quarter it was 18%. So chronic should continue the growth, and acute growth driver in, assuming that later half of the year, the antibiotics may not show as robust growth as they are showing in the first half, will be, compensated by the other portfolio which are there, like, as I said, vitamin D3 and other preparations. So overall, the portfolio mix should drive the given guidance, what Mr. Dubey to you all.
Fair enough. I'm just wondering whether, this business could potentially see some decline also, because, we have grown 27% in FY21. So, once it recedes, I'm just thinking whether, there will be a decline or not in this portfolio.
Yeah, that's what I said. Some amount of rationalization will certainly happen because, first quarter will see extraordinary growth because of COVID. So whether it is antibiotics, whether it is vitamins, minerals, the antacids, they all will show excellent growth in the first quarter. So April, May, June will go extraordinary, and then it will settle to a normal growth. Normally the industry grows at around 9.5 to 10%. So we expect industry to grow at a similar rate in the balance 8 to 9 months of the year.
Sure. My second question is on Duexis. I think you are the only company to get tentative approval and also win in the district court. Do you expect to launch this product this year, and the kind of competition you expect in this product?
Yeah, Amit, you can take that. It's a fair question, Amit. You can go ahead.
Sure. As we responded in the last quarter, the brand has obviously appealed in the federal circuit, and we are right now litigating in the federal circuit, and we don't have a final approval as well from FDA. Yes, we do have the tentative approval. So, that's the answer to the question from a launch perspective. Competition-wise, we are not first filers, so obviously there is a first filer that is there. There's another company which is litigating, which is in the public domain. So all of those are potential competitors. Authorized generic is always a potential competition. So all that, we always have to factor.
Sure. And just last question from my end, from Mr. Dubey. What tax rate should we expect for the next couple of years?
Taxes, actually, I will again stick to my guidelines given earlier. So for 21-22, will be somewhere in the range of 13 to 14%. And the same similar situation, 50 or 100 basis points plus or minus, we are expecting for next 3 years. I think after 3 years, we'll discuss again, depending on situation, tax laws, and so many factors are there.
Sure. Thank you very much, and all the best.
Thank you. The next question is from the line of Shriram Rathi from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Just one question on this 80 crores of inventory provisioning in the US market. Is it possible to share for which product it is, and is there any relation that this quarter revenue is lower with this provisioning?
I'm sorry, I did not get your question completely.
Sorry, so I was asking that, the inventory provisioning that we have taken of 80 crores in this quarter. So for which product it is, and is there any relation with the lower revenue being reported in quarter 4?
I think, Mr. Gray, are you taking this or you want me to take this?
So the way you can take both. And you can tell them the product, it's no big deal.
Yeah. So as I talked, it's a US required product, and of course it's in top 7 products. If we see it's featuring in one of the top. Mainly it is that. Besides that, small other few products are also there where we feel even though they have shelf life more than 6 months but less than 12 months, will not be. We are not feeling.
No, Mr. Dubey, the largest product we can tell them. Just it's okay.
Ibuprofen is the product where we have taken maximum. So major chunk of 80 crore it has gone in that.
Okay. And okay. So in this quarter, the revenue which is lower, I mean, is there any relation with this provisioning or it is normal run rate now, 73 million?
No, of course, when provision it has gone in COGS, obviously it is going to bring down EBITDA as well as entire profitability. So impact is there.
Sales.
Yeah, and as well as we have lower sales also because we have competitor also there, and in this quarter also we are having lower sale for ibuprofen.
Okay, got it. And just a follow-up to that, this quarter we have around $74 million kind of sales, which is of course much lower than what we have for the full year run rate. So in FY22, should we expect that the overall business for the US market should grow?
Mr. Amit, correct?
Sure. Look, yes, absolutely. We are expecting growth on our overall portfolio on a pure, entire fiscal year basis. And mind you, in FY21 also on pure, entire fiscal year basis, we have grown over FY20. So to answer your question, yes, we are expecting growth on overall fiscal year basis.
Okay, that's helpful. So this will mean we are expecting that in the coming quarters the run rate should increase meaningfully.
Yeah, Gagan, I need to kind of go through the meeting, Gagan, so just letting you know.
Thank you.
Yeah. Can we move to the next one? Next participant?
Thank you. Thank you. The next question is from the line of Shrikant Akolkar from Asian Market Securities. Please go ahead.
Thanks for taking my question. This year we have done very well. As in FY21, we have done very well in the trade generic business, and it is now contributing 1/5 of domestic business. How should we see trade generic business going in FY22?
I think if your question is like, how should see a very broad question. So like,
okay,
if we continue to grow in double digits, that's all I can say right now. Yeah.
I think from the first quarter onwards, we have contribution probably has gone down. I think it was probably 1/4 of the total business. Now it is 1/5. So, do you think that this will continue till we are this business is contributing about 15%, just like some time back?
No, so Shrikant, the contribution of trade generic has gone down not because the trade generic business has slowed down. It is because the prescription business has picked up significantly. Okay. So in terms of the momentum for trade generic for Q4 and even in the first 2 months of FY22, it is still good. It is we are maintaining the momentum of FY20 or FY21 and 22 as well.
Okay, so we should expect double-digit growth in that portfolio.
Yes, so whatever is the guidance for India business, I think the trade generic business is going to go in sync with that.
Okay. Another question is on the overall color on the US EBITDA margins in the quarter when we have taken inventory provision and overall in the fiscal year 21.
So on overall basis for fiscal year, I think it's a reasonable kind of EBITDA margin we have. Somewhere close to double-digit kind of EBITDA margin. Yes, as I mentioned for this quarter, because of this inventory write-off, we do not have positive EBITDA margin, but definitely for year we have reasonable EBITDA margin of double-digit.
Okay. And one last question on Indore facility. So, if you can provide more color, how many products, because you're saying PAI, so how many products would be filed from this facility probably in FY22, I'm sorry.
Can you repeat your question, Shrikant? Hello?
So I was asking, there are two questions. One is if you can provide color on the Indore facility kind of capabilities it has, and how many products can be filed from this facility in FY22?
We have our Indore facility, and actually we have already started taking filing batches. And in fact, we have filed one or two products, and we are awaiting audit of US FDA. So on that front, we are very comfortable, and it's going as per our plan. Definitely, we are going to have more and more number of products filed from this facility. Objective is to have best advantage of SEZ plant, and it's going as per our estimate only. So we feel we'll be able to start commercial production in reasonably well manner, and hopefully, and obviously it is going to add up as and when new filing happens from this facility. Right now, we have selected good products having good margin, and so we are very optimistic having complete usage of this plant for improving our margins as well as the profit after tax.
Thank you so much. All the best.
Thank you. We'll take one last question from the line of Fayan Mukherjee from Nomura. Please go ahead.
Yeah, thanks for the follow-up. Sandeep, on the chronic segment in India, how should we think about, or how are you thinking? I understand based on the IMS or AIOCD data, it's kind of more or less equally split between diabetes, cardiac, and neuro CNS. How should we think about this piece growing over the next 3 to 5 years, and what would drive it? Is it new launch opportunities that you get in this space, or market share gains in older products? If you can make us understand what would be the key driver, and if you can guide for a number, that would be helpful.
Sure. Thank you, Sam. So most of our growth will derive from cardiac and diabetes in the chronic segment. I think that is very clear. Mainly for two reasons. One is obviously internal. The other is just the large market size of these two segments are phenomenal. And a lot of new launches. And to answer the second question, the growth will be driven by gaining market share what we have. And second, there are some listings being offered in the next couple of years. So new launches will also play a role there, no doubt about it. And this would be driven mainly by cardiac and diabetes.
Okay.
So your third question, sorry, I reconfirmed the last part. So in terms of guidance, see, I think we will reiterate that I think the business is still on a low pace. We will double this in the next 3 to 4 years.
Okay.
Yogesh is there. He can add some color to it. Yogesh, I'm sure you feel confident about it, Yogesh. You can please add your comments.
So, Sandeep, I think you have perfectly answered and complete that, major focus will be on diabeto-cardio because they contribute almost 52% to the chronic business in industry. So if you have to build our chronic portfolio, then cardiac diabetes we have to make big. And as you rightly said, we are looking at doubling up our business, in around 3.5 to 4 years' time. And there will be a mix of both. There are some good opportunities coming in forms of, DPP-4 and SGLT2s. So in next 2 years, we'll have at least 3 such products which are blockbusters. And at the same time, we are also consolidating our current portfolio. So we are in process of building brands of 100 crores and 50 crores in a year or 2 years' time. So building large brands and also exploring the future potentials which can make us big. These two will be the growth driver for cardio diabetes.
Okay, that's helpful. And just if I can ask one last question on your, MR strength and what is it now? I mean, I understand you said you're not expanding it further, but if you can just share the number and how has your market coverage increased over the years? I mean, are you using the higher MR strength to focus on brands or reaching out to more doctors?
So
Yogesh, you can take that.
Yeah,
Yogesh. Yeah.
A mix of both. Currently, as an entire group, Alkem Group, we have roughly around 12,000 people working, and in acute we have a clear focus of reach, because we already have a large portfolio there. So we have expanded this year by close to around 600 people, and this is basically to focus on some of the critical brands like Clavam and Pen, and with an also approach of reach also. So it's a both way kind of approach for acute. In chronic, we will we'll focus more on building productivity, because here we have a reasonable good field force and our productivity is in average range. So we want to increase the productivity in chronic. So this is how we are driving both acute and chronic portfolio.
Okay. Thank you very much.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to the management for closing comments.
Thank you everyone for attending this call. If any of your queries have remained unanswered, please feel free to get in touch with me. Thank you once again.
Thank you. On behalf of Motilal Oswal Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your line.